Are the bulls or bears ruling the United Kingdom ETF? First off, read this disclaimer carefully. This is the entire newsletter. Let's go to stock markets, and we will specifically look at United Kingdom. It's of course in Northern Europe. You can see that the ETF is around 25% gain from the 52-week lows, but it is still minus 29-ish% away from the 52-week highs. Here you can see the recent prices, the beta, assets under management, volume average, and this is the name of the ETF. It is the iShares MSCI United Kingdom ETF. And here you can get some data about the UK, GDP, consumer price index change, total tax rate, and also forested area. United Kingdom, more specifically the British Empire, will illustrate a very important point towards the end of this video. First, let's look at the charts. Weekly data points going all the way back here to 1996. We got tons of history here. Here you can see the dot-com bubble, the rally, double top, then the housing bubble. You can see that these are very clear trends, easy long, easy short. What's quite interesting about this ETF, unlike the S&P 500, is that during the bull market, the most recent bull market, this ETF was not even close to breaking out above the housing bubble high. Interestingly, we did not even break out above the high here from the dot-com bubble. That is rather interesting. This is a much weaker stock market than the USA. However, United Kingdom previously had a huge, super powerful empire. This is a hint of how quickly an empire can be lost and what can actually happen. Looking at the moving averages here, you can see that we are literally below almost all the moving averages except the 5-week moving average. The recent plunge, it brought us almost back here to the lows of the housing bubble. You could make the case that this is a head and shoulders pattern. Shoulder, head, shoulder, breakdown. That is not good. Like in other stock markets, we have seen a bounce here of extremely oversold levels. A whopping RSI here of 13. Extremely oversold. We do have some kind of support here from the 5-week moving average, but we are getting squeezed between that support level and resistance here at the 10-week moving average. Yeah, so this there's been a bit of a rally, but we are very far away from the highs. Let's actually do a Fibonacci. Well, let's do the Fibonacci on the daily data points. You can see that the correlation with the S&P 500 is minus, well, there's basically is no correlation between United Kingdom and the S&P 500. Let's look at the daily data points. Here you can see that we are, let's load the moving averages. We are below all of these quite significantly. We have found some support here at the purple 20-day moving average. That's a very important moving average, especially viewed by more intermediate time frame traders. But we are seeing lower highs and lower lows. Lower lows and lower highs. Hence, there is definitively much more of a battle here between the bulls and the bears than what we have here. Here is some short covering, more dominance by the bulls, but then it becomes very tepid, as you can see. I mean, this is not much conviction. Hence, I would categorize this as very much vulnerable. Let's do some Fibonacci retracements. Like that. Let's measure it from that high to that low. So we have done an approximately 38% retracement, which is much less than what we have seen on the S&P 500. If we get the SPY here, which we can use as a benchmark, so here we have the S&P 500. We also have this squeezing action here, in this case on the dailies, but we have been able to close above the 50-day. But then again, this is not like some super bullish breakout at all, given that this is a declining 50-day. Hence, it was given that we would eventually break out above it, because you can see how sharply this 50-day moving average is declining. Hence, this wasn't like a huge success. The big caveat with the USA is that it is viewed as a safe, of all the stock markets, it's one of the best safe havens. You can see that the Fibonacci retracement here is much better. We had only 38% in the United Kingdom, but here we are actually above the 50. Even trying to get up here to the 61.8% retracement. The big question with the S&P 500 and also, frankly, this ETF, United Kingdom, that is the effect of the central banks just pumping money into the market. Some buying directly and others indirectly buying by giving banks access to a lot of money. That will, be bullish for assets. However, it could also be interpreted as desperation, which it is. It is a desperate move. That could in turn make many go into cash. If people start fleeing into cash as a safe haven, as a great alternative to a very erratic stock market, then we would expect to see significantly lower prices. And as we saw here on the weeklies, I mean, this ETF is not, it didn't even break out above the .com bubble high during this bull market. Hence, even though the S&P 500 looks very strong, and it is, many other parts of the world post the financial crisis here, they are much, much weaker. Hence, if you just look at this, you will get a very caricatured picture of reality. Let's look a bit at, Saks.com, they have a number 3 hold rating for this ETF, the EWU, medium risk. ETF.com, B95, you can see that assets under management, 1.7 billion US dollars, that's decent. Average daily dollar volume is 122 million US dollars, that's reasonably liquid. 98 holdings. Let's look at some of the, here you can see the top 10 sectors. Here are some of the top companies. GlaxoSmithKline, British American Tobacco, Royal Dutch Shell, Unilever, Rio Tinto. Yeah, you have the interesting thing here is to see these companies that are these leftovers of the empire that it used to be. And in the same way that the British Empire imploded very quickly, we could very well see something like that with USA. Let's get into an extremely important topic, which is especially relevant when it pertains to the British Empire, because the British Empire illustrates this so well. Cycles and paradigms. They come and go like this wave in the background. The rise and fall of cycles. The thing is that there are many expansion, contraction cycles out there. I mean, they come in all different shapes and sizes. The thing is that expansion and contraction is one of those phenomena that are deeply embedded into creation itself. There's even theories that our universe is expanding and contracting like a lung Yeah, so we see cycles on different levels of analysis. Some cycles affect each other's while others don't. Something we consistently see across all species is that poor planning during expansion cycles can cause or worsen compression cycles. When these dinosaurs went through their expansion cycle, they pushed it way too far. Then a compression cycle came, and we know what happened. They are not around. Well, very few of them are around anymore. Here are some of the currently active cycles/paradigms. On the big picture, in a super big picture, the geologic timescale, this is the Phanerozoic Eon, the Cenozoic Era, Quaternary Period, and Holocene Epoch. Compression cycles in nature take the form of mass extinction events. And the bad news, and this is way worse than, global warming and stuff like that, we are literally, scientifically speaking, in the 6th extinction event. This current extinction event is called the Holocene mass extinction. And it is basically the result of our reckless expansion. We are doing the exact same thing that our primitive ancestors did, and then I'm talking about way back into our ancestry, fishes, trilobites, those kinds of super primitive animals. We are literally doing the same thing, so even though we are much more intelligent than a trilobite, our intelligence is not sufficient to manage expansion and contraction. As far as the alpha species, yes, we are the alpha species currently. This is the era of the predominance of humans. Spiritual cycles, the rise of secular social justice egalitarianism. Yeah, I would say that that's basically our current period. We do not really live in the Christian era as such. This is Christianity has morphed into a secularized form of it, which we can call social justice egalitarianism. It contains aspects of Christianity, but in an altered form. Yeah, so it is a derivative of Christianity humanism. Spiritual cycles are very robust. As an example, Christianity, it survived various civilizational collapses, like the Siege of Jerusalem, the fall of Rome, and the Middle Ages. But something we do see is that even though on paper, paradigms like Christianity, they do survive, they do change quite drastically over time. Civilizational, currently, USA is the big empire, and we can call it a liberalist empire. When you compare the American Empire to many of the other empires, like the British Empire, Spanish, German Empire, Russia, Rome, Ottoman Empire, what's quite striking about USA is the liberalist part. Many of the other empires, they had this identity, they had this big idea that they wanted to push upon the world. They had this thing they wanted to just spread. That it's not. USA does, of course, have the values of democracy and freedom and all of that, but the paradox of spreading freedom is that you do not want to actually spread something very ideological, because that is an antithesis to freedom. Hence, that's the paradox of liberalism, is that you can't spread something that is not supposed to be spread, because freedom is supposed to be free. So yeah, that's a paradox. The world wars, that's the reason why USA is so powerful. It resulted in the fall of many empires, and USA basically just filled the power vacuum. So the empires built by Soviet, Great Britain, France, Dutch, Germany, Japan, Portugal, and Spain, they all unraveled. Many of these were, called colonialist empires. Though if you really think about it, it's very hard to distinguish a colonialist empire from a non-colonialist empire. because the fact of the matter is that 500,000 US troops are stationed on outside of USA, spread throughout many different countries, and the vast majority of international companies throughout the West and many other parts of the world are American companies. And yeah, it's basically about how do you define it. So the American Empire, it is certainly a military, political, cultural, and financial superpower. Big thing that should bring a lot of caution to Americans is this. And not simply this, there are many other empires throughout history that have grown fast, become super powerful, and then completely unraveled. Let's continue. Other paradigms: human population size. Further increase represents a major systemic risk. Biologists and experts on the ecosystem estimate that our planet can only sustain for a long period around 1 billion human beings. We are far above 1 billion at this point. Hence, we have pushed it way too far, and it is a huge systemic risk. The mass migrations we have seen so far are nothing compared to what is coming in the future, which will be very destabilizing and very quickly lead to political radicalism. There are also debt cycles. The global debt cycle is definitively in expansion mode. The monetary and fiscal policies are extremely loose. Trillions with a T, trillions of dollars are created on a whim to solve problems, and historically that's never worked out. As far as generations goes, you have the baby boomers, they are receding, and we are seeing the rise of the Gen X and the millennials. Economic cycles, we are very likely in the end stage of the post-2008 financial crisis bull market. Most would make the case now, me included, that the bull market, it effectively ended this year with the virus sell-off. And beyond all of these cycles that we have looked at, there are also cycles related to seasons and days, and within all of these categories there are micro cycles. Yes, cycles, they are a huge deal. We see them everywhere. We see them in the charts as well. You could make the case that this is a rising cycle, declining cycle. This is a minor rising cycle, decline. So cycles are everywhere. It's a super important topic, and the biggest cycles are most important. The biggest risk for all financial assets going forward is that we are in the declining cycle, declining ecological cycle, represented with the mass extinction event. That will have big ramifications. Whatever you do, of course, you want to let the trend be your absolutely best friend.